Hey Daniel, this is Ryan with TrendLizard.com. I got your email. Thanks for the kind words about our service at TrendLizard. Thanks for being a member for the past year. As you know, what we do at TrendLizard is take a look at basically anything that can be plotted on a price chart and analyze the Elliott Wave pattern to determine where it is in a predictable progression that can help us determine where it's going to go in the future, so we can forecast its price movement, get ahead of trendy moves, and make money. So that's what we're going to do with the three tickers that you sent me. We're going to take a look at a few that I'm sure people are familiar with. First up, DIS, Disney. Second up, INTC, Intel. And lastly, GM, General Motors. We're going to start with Disney. Our data does not encapsulate everything that has happened to Disney. Our data just goes back to 1980. But I think it gives us all that we really need. This guy was incepted prior to our data, once again. Was in a huge up move. And basically, all that is obviously trendy price action and was reset by this massive decade-long ABC pullback to the downside that happened in the early 2000s, along with the entire market. Since then, it put a low in 2009 and has been in this massive trendy up move to the upside. Now, my labeling of this guy has us in the fifth wave of this five-wave move, 1, 2, 3, 4, 5. And I want to address another possibility that you could potentially see out there, and that would be that you had a 1, 2, 3, 4, completed wave 5, corrected it real quick, and are starting a new trendy up leg. I do not subscribe to this labeling here. I don't think this fits very well, and the reason being is I don't believe that an 11-year advance, which is what this five-wave move would be, can be corrected by a couple months of downside action. I think you would at least have to see a couple years of corrective movement. Something basically like this. I mean, we'd be essentially talking about a move on the same time frame, but that happened in over just a couple months. Long story short, that's why I believe we're still in this five-wave advance to the upside, and that is how our analysis plays out moving forward. So let's go ahead and zoom in just on this five-wave advance off of the 2009 low. This is the labeling, as you can see here. 1, 2, 3, a very large fourth wave pullback, and currently in the fifth wave of this advance. Whenever a five-wave move completes on any time frame, it is corrected by a larger pullback. So when this massive up leg, which has lasted, I guess, then 13 years, 12, 13 years, somewhere around there, once it's corrected, we would expect a much larger pullback, something that lasts probably a couple years just to correct this big up move. So at that point, I wouldn't want to own it. So once this fifth wave completes, I think it would be time to step aside on Disney, let it correct, and maybe look for a buying opportunity after that correction. But for me, I'm not sitting through anything that's setting up to correct for a long period of time. So you can be bullish now, absolutely, until this up leg completes. But as is, higher prices have to be expected. But this does appear to be the fifth and final wave of the advance off the 2009 low. So let's go ahead and zoom in just at the advance, this fifth wave advance here. And this looks at it. The initial up leg appears to be a leading diagonal for wave 1, a larger second wave pullback, a third wave advance into the 2021 high, and then in a fourth wave pullback that either ended recently or has not yet ended, and we'll take a closer look at that. So if we zoom in and look just at this price action, well, before we do that, just to understand when this takes on a complete five-wave form to the upside, once we get a fifth wave up to the upside, that's when we're going to be on guard for that important high as discussed before. So we do expect higher prices, and you have to be bullish until you see a completed five-wave move. But then again, once that happens, we'll be looking for a larger pullback. This will remain bullish as long as price is trading above 150. So with that said, now we'll take a closer look at this 2021 price action here. So here's it. Here's the case that wave 4 could have already completed. You can see the down move in 2021 does look like a counter trend to ABC move, so that's a good thing. It's had a pretty good bounce off of May's low, gave us a small but trendy up leg, and then this three-wave pullback. It's trying to determine right now whether this fourth wave is completed or not. If it has, I wouldn't want to see price move much below last week's low. If it does, I would have to conclude that we're still in this fourth wave pullback that began in 2021 earlier in the year. If instead it can stay above that level, continue higher from there, then the case can be made that wave 5 up has already begun. A move above 190 at any point solidifies that and says that wave 5 up has begun. But in the meantime, we're going to find out. Again, it needs to stay largely above the low recorded last week. If it does not, we'd have to think it is still in this counter trend fourth wave pullback, awaiting that fifth wave advance. So be bullish against 150. When you see some trendy upside strength, we would consider it the start of that fifth wave up, and I would ride that move to the upside. Once there's indications that this entire 5-wave advance is completed, that would be when it's time to become more cautious in your efforts there. So, and of course, I'll be happy to guide you once we see that next up leg hit the charts. So there's Disney. Moving on to INTC, Intel. So I had to look at this a couple different ways. It's obviously a huge uptrend, started at less than 30 cents, has gone up to about 70. It's currently trading around $57. Back in the 80s and 90s, it gave us a very nice trendy 5-wave advance that was corrected by a very large ABC pullback. This price action looks fairly flat relative to what we've seen here, but I'm confident in this labeling here, and I'll show you why, because I'm going to change this from a logarithmic scale. You see how the boxes get smaller as we go, to a linear scale where they're all the same size, and this just puts things in just a little bit different light. But if we look back at this move here and then this pullback, it's this move here and then this pullback. It's pretty clear that this was a much larger pullback and that this low right here kicked off something new to the upside. So that is kind of our starting point, and it's just a long roundabout way to say this is our starting point for the current pattern. Surprise, surprise, it's the 2009 low, like it is for so many other stocks, indexes, and everything else that we look at. So basically, we're just looking to label price action off this 2009 low. And here we do that. So you have a first wave up, a pretty ugly ABC second wave pullback, a running correction. But if you look at this up move off of 2010 into the 2012 high, it's a pretty clear 3-wave move. So we call it a B wave. It doesn't fit as a new trendy move. And then a C wave down. So first wave, second wave. And then we believe we are still in the third wave advance of this move here. It's a little bit difficult. I mean, things get pretty choppy since 2018. There's been some big swings, but overall it's headed sideways, so makes it a little more difficult to label. But this is how we have it. I have a first, a second, a third, and a fourth wave that may or may not be complete. We'll take a closer look at that. So it seems to be a theme with the stocks you sent me, but all of this within a larger third wave advance. So ultimately we would be expecting a larger 5-wave move to take shape on this guy. And if you're long-term trading this thing, you can hold it for a long time until that happens. You can expect higher prices. You may sit through some larger pullbacks like we've seen 2020 and even the years prior to that. But overall, it looks bullish. Higher prices have to be expected. So the bigger question becomes this near-term action. Where are we? Let's go ahead and zoom in. This looks at the action since 2020. So very clearly a counter trend move. You have this big A wave down, B wave up, C wave down. So potentially that is the end of a fourth wave, and everything we've seen since then is the start of that fifth wave up. We get trendy price action to the upside here in late 2020, early 2021, but then we've had a sharper breakdown in 2021 and then some sideways action. So the case that we can make that wave 5 has begun hinges on Intel staying above 52 at all times. If it moves below there, we're going to have to come to the conclusion that wave 4 is not yet over. So if we take a step back, it's this move here. We would expect a larger counter trend pullback to play out before that uptrend resumes. So 52 is the key level. If Intel can turn around and move above 63, that's going to be a bullish thing. That if you didn't own it, that's where I would buy it. But that would be a good sign that the next up leg is beginning and that also this 2021 pullback is a counter trend move. Again, 52 is the key level. A move below there changes things and tells us that a larger fourth wave is playing out. So this shows that labeling there and why that's a possibility. This labeling, again, is only valid as long as this price stays below 63 and would be solidified with a move below 52. The one thing that makes me worried that maybe this is the labeling that's actually playing out is if we take a look at this downside action off of the 2021 high, and let's do that real quick. That down leg here looks pretty darn trendy, and then you see that recovery off of May's low, looks pretty flat, looks quite a bit like a counter trend move. So that worries me that it's setting up for lower prices. If you own it, I'd say you can own it against 52. If it moves below there, I would sell because it would be looking like a setup to move back to the 42 area before that fifth wave up begins, at least on a short-term time frame, if you're playing it on a short-term time frame. But yeah, we'd be careful just because that down leg does look trendy off of April's high, and recent price action looks counter trend to the upside. So On a long-term time frame, absolutely bullish. I think you need to be more careful on a near-term time frame. A move below 52 at any point tells us that a larger fourth wave pullback is playing out, and that would point us back to 42, that area, before price turns higher again. So let us move on now. We will take a look at GM, General Motors. And this guy has not been around as long as I would have expected. It was incepted apparently back in 2010, or at least that's how far my data goes back. Some pretty funky action. None of this is obviously trendy. To me, it looks to me like the end of a trendy up move. Who knows? Hard to label. The important thing is the pullback off the 2018 high into the 2020 low is a very clear ABC pullback. We know about ABC pullbacks. They're counter trend moves. That has to mean that the trend is up, and that has obviously proven correct off of the 2020 low as price has shot higher very quickly, very directly, in a very trendy fashion. So, hey, why wouldn't an auto company go absolutely nuts when the economy shuts down? I don't know why, but hey, that's why we use technical analysis and try not to make sense of this stuff. So let's go ahead and zoom in on the price action off the 2020 low. Here we go. Similar to a lot of other stocks, the initial price action looks like a leading diagonal. At least that first wave of the larger first wave looks like a leading diagonal. So we have a first wave here, second wave pullback, a big third wave advance into the 2021 high, at least that initial high, and then some sideways awful choppy price action like so many things are in currently. And just like your other two stocks, the debate is this fourth wave complete, or are we going to get a larger fourth wave pullback before it heads higher? Either way, you have to be bullish. Either way, you have to expect higher prices within this up leg. Once this up leg completes, I think it would be time to step aside and see what comes next. But until a larger five-wave pattern takes shape here, higher prices have to be expected. So let's go ahead and zoom in on the 2021 action to see what we think about this fourth wave. So here's the third and fourth wave. If it completed here in May. We have a nice five-wave advance to the upside, and then this pullback that's grown quite a bit. In this case, in the case of GM, we'd want it to stay above 58 if this was the low to wave 4. If it moves below much below 58, we're going to have to think that this fourth wave is not yet over. If it can find a low and turn above 62.25, that would be some pretty solid proof that higher prices are coming right away. But again, if it moves below 58, that's going to look like we have an A, B, an incomplete C wave down that should carry GM back towards May's low, back towards like that 54 area to complete that larger pullback off of April's high before price turns higher to give us that fifth wave. The important thing is the up move's not over. It's just a matter of whether this counter trend price action that has dominated 2021 has completed yet or not. So that is what those key levels will tell you. A move below 58 indicates a larger pullback. So there you have it, Daniel. I hope this is helpful for you. Thanks again for being a member at TrendLizard.com. Have a wonderful day, and we will talk to you next time.